All right, today we're cracking open a case file that people have been arguing about for what, over 70 years now? I'm talking about Eustace Mullins' super controversial 1952 book, Secrets of the Federal Reserve. Now, this is not your typical economics textbook. Not at all. It reads more like an expose, a detective story about a great betrayal. So we're going to follow the trail of evidence that the book lays out, piece by piece, to really get a handle on its explosive claims. To really get this book, you have to understand its wild origin story. It was actually commissioned by the famous, and let's be honest, famously controversial poet Ezra Pound. At the time, Pound was basically a political prisoner in a DC hospital. And he told the young author, Eustace Mullins, look, don't write some dry, boring economic textbook. Treat this like a detective story.
And you know what? That's exactly how we're going to handle this. We're taking Pound's advice. We're going to dive into this case file just as Mullins presents it. We'll look at the supposed scene of the crime, we'll line up the suspects, and we'll trace the fallout from what the book calls this massive, monumental act of deception. Okay, so every good detective story starts with a time and a place, right? Well, for this one, the place is a really remote island off the coast of Georgia. The time, November 1910. This is the scene, according to the book, for a secret meeting that would supposedly seal the fate of the entire American financial system. And the level of secrecy the book describes is, well, it's pretty staggering. You've got a group of the world's most powerful financiers literally sneaking out of New York in the middle of the night. They're in a private rail car, completely sealed, with all the blinds drawn. Their destination? The super exclusive Jekyll Island Club. And their mission? To draft a new central banking law in total, complete secrecy. So, the book lays out this clear chain of events that led to this secret meeting. It all kicks off with the Panic of 1907. That whole crisis creates this huge public demand for some kind of monetary reform, a more stable system. This in turn leads to the creation of the National Monetary Commission, led by a Senator Nelson Aldrich. But, and this is a huge but according to the author, all that public work by the commission, it was just a smokescreen. The real plan was being cooked up on Jekyll Island, and that plan, well, that's what would become the Federal Reserve Act of 1913. Okay, so if there was a secret plan hatched on Jekyll Island, who was in the room where it happened? The book is incredibly specific about the identities of the men it calls the conspirators. And we're not talking about just any bankers here. According to the source, these guys were representing the most powerful financial dynasties on the entire planet. So here's the lineup of the suspects. First, you've got Senator Aldrich, the political insider. Then, you've got the money men. We're talking representatives from J.P. Morgan, from Kuhn, Loeb & Co., and from the Rockefeller-controlled National City Bank. Now get this. The book claims that these 6 men, right here, represented something like 1/4 of the entire world's wealth at that time. Just let that sink in. Now, out of this group, the book really puts a spotlight on one guy in particular, Paul Warburg. He's presented as the technical expert, the architect of the whole thing. He came from this powerful Warburg banking family over in Germany, and he brought all these ideas about European central banking with him. The source argues he then skillfully tweaked those ideas to create a system that would, you guessed it, serve the interests of the other powerful men in that room. But the book argues that these individuals, they were really just the tip of the iceberg. They were seen as agents, representatives of much larger, even more powerful international banking families. We're talking dynasties like the Rothschilds. The source claims that families like these had wanted to set up a central bank in America under their influence for a long, long time. And the men on Jekyll Island, they were there to finally make it a reality. Okay, so we have the scene of the crime, and we have our lineup of suspects. Now it's time to look at the weapon. According to Mullins, the weapon wasn't a gun or a knife. It was a piece of legislation, the Federal Reserve Act. The book paints this act not as some kind of noble reform for the public good, but as the legal crowbar used to seize control of the entire U.S. economy. So what was it, according to the book? At its very core, the source defines the Federal Reserve Act as the creation of a privately owned corporation that was given a public monopoly. It claims that a small cartel of private bankers was handed the exclusive power to create money, literally out of thin air, and then lend that money to the U.S. government at interest. That right there is the central act of the so-called betrayal. And how did this weapon get deployed? Well,
The author alleges it was all done through some sneaky legislative maneuvering. The claim is that the final vote on the bill was deliberately pushed through on December 23, 1913. Why then? Well, a lot of congressmen who probably would have opposed it had already left Washington for the Christmas holiday, thinking nothing major would happen. This left the door wide open for the bill to pass with way less opposition. To really hammer home the controversy, the book points to this quote, which it attributes to William Jennings Bryan. Now, he was actually a key figure who helped get the votes for the bill. The author uses this to suggest that, hey, even some of the people who supported it at the time eventually came to regret it, maybe realizing, a little too late, what kind of system they had actually helped to create. And just when you think you have the whole picture, the plot, as Mullins lays it out, thickens, and it crosses the Atlantic Ocean. He argues that the real center of power for this new Federal Reserve System wasn't even on Wall Street. Nope. To find the ultimate controllers, he claims, you have to follow the money trail all the way to London, the financial heart of the British Empire. This is basically the map of what the source calls the London Connection. It tries to draw these direct lines from the big American banks we've been talking about, like JP Morgan and Kuhn Loeb, straight back to their affiliates and parent companies in London. And according to the book, the ultimate controller pulling the strings behind the scenes was the House of Rothschilds, along with their associates at the Bank of England. And controlling the money, the book claims, was only half the battle. To protect this whole setup, these same international financiers allegedly moved to gain control over the major news agencies of the era. The idea was that by influencing Reuters in London, Havas in France, and Wolf in Germany, they could pretty much shape the global news narrative to fit whatever economic or political agenda they had. Okay, this brings us to the final act of our detective story. The big question is, what's the verdict? What does the author say are the long-term consequences, the real legacy of this system that was supposedly cooked up on Jekyll Island and controlled from London? Yeah, this is the key question. The last part of the book really tries to tackle. We're moving beyond the secret meetings and the backroom deals now. This is all about the real-world impact on the lives of ordinary people right through the 20th century. And the book does not hold back. It basically lays the blame for almost every major disaster of the 20th century right at the feet of this system. The Great Depression, the source argues it wasn't an accident, but an engineered event to shear the flock, as they put it. World War I, the claim is that it was pushed and financed for profit. And the constantly growing national debt and the income tax, the book links them directly to the need to pay interest to this private banking cartel. So when you boil it all down, this is the ultimate takeaway from Mullins' entire investigation. It's a simple but pretty profound claim that a private, totally unelected group of bankers was handed a monopoly over the single most powerful tool in any modern economy, the power to create and control the nation's money. The book closes its case by bringing up the spirit of President Andrew Jackson, who was, of course, a huge opponent of central banking. This quote is used as a final, really provocative thought. It leaves the reader wrestling with one explosive question. What if this wild detective story, with all its secret meetings and powerful suspects, is true?